Hello, everybody. My name is Connor. I am founder and CEO of Leveris, and I'm joined here today by Aidan, who is our head of marketing. I would like to explain quickly what Leveris is, but I'm going to do that initially by quickly explaining what Leveris is not. Leveris is not an app. Leveris is not a neobank. Leveris is not middleware. And Leveris is not a legacy banking system. So Leveris, therefore, is something a little different. We think it's time that somebody tried to build a modern banking platform that's built for 2017. So for the last 4 years, 200 of us have been working away quietly to bring you an end-to-end, enterprise-grade digital banking platform. In other words, a bank in a box. If Google or Facebook or Amazon or a company like that were to build a bank today, what you'd end up is something that we think that looks pretty like Leveris. So what does this thing actually look like? Surprisingly enough, it looks like a bank. It has all the hygiene features and functionality that you would expect, including current account, a savings account, cards, debit cards and credit cards. It supports all kinds of payments. It's got KYC and AML. In fact, it has everything you need to run an entire bank end-to-end, including, if you require it, physical branch support. So what then, you ask, is the principal difference between the legacy system that you're running today and this system? Well, the big difference is, on the surface they look the same, but the big difference is that when it comes time to make a change, it's easy and inexpensive to do on the Leveris system, and it's very difficult to do on legacy. But that's not all. There's something interesting happens when you take an integrated approach to data and technology at the system level, at the architectural level. And we want to show you one brief example. It's just a standard payment. So this particular version of the app was developed for a very specific use case. In fact, it was developed for a student or youth proposition, as a student or youth proposition. In this example, the student wants to make a payment. He selects a payee. He chooses the account to pay from, enters an amount as normal, and makes the payment. But at this point, however, he's presented with a choice. He can either pay the 5-cent fee, in which case it's lifted directly from his account, or he can elect to go ahead and watch this ad and get it for free. The student, in this case, opts for the latter. He watches the ad. So what's actually happened here? Well, the student didn't pay for the transaction, that much we know. But the other important thing here is that the bank didn't pay for this transaction either. So if you multiply this out at a macro level, it means that we can provide your bank with a state-of-the-art free banking service for students at no cost to the bank. And all that will do wonders for your cost-income ratio. So aside from the hygiene features that we just mentioned, what else have we got? Well, let me give you 4 good reasons why you would want to work with Leveris. Number 1, this is a low-risk option with a high potential upside. You don't have to rip and replace any of your systems to try Leveris. You can deploy it in parallel at low cost. Number 2, rapid deployment. If you know what you want, we can deliver a full-services digital bank for you in about 180 days. New revenue lines. Banks are sitting on perhaps the most valuable repository of data on the planet, and we can help you leverage that data to both improve your bottom line, but also to improve the quality of engagement with your customers. And fourthly, and probably most importantly, Leveris enables you to defend against a multitude of competitive threats. For example, those might emanate from other high street retail banks. They might come in the form of fintech encroachment, i.e. external innovation. It might come from a change in regulation, changes to stuff like PSD2 or open banking. Or maybe most significantly, these changes, and this is to all of the large banks out there, these threats may come from global platforms, companies like Google or Facebook. Facebook already has a European banking licenses, and all of these guys have ambitions to enter the space. And the thing is that these companies have more money, they've got better technology, than you do, so it's not easy to compete against these guys on a legacy platform. There's one more thing I'd like to show you before we sign off in the demo, and that's, because we're here at Finovate, that's how this new platform enables banks and fintechs to collaborate. We do not try to reinvent the wheel here. Let me just show you how this works. On our homepage, we have a thing called Add App. We click that button, and it takes us to something that ostensibly looks like an app store. There are two kinds of applications in here. There are native apps. There are things that we've authored, stuff like ATM Finder, et cetera, et cetera. But there are things on here that have been authored by fintechs. Those are third-party applications, and the difference between the native app and the third-party app is that in the third-party app, there's also a deal underpinning everything. In other words, there's a quid pro quo. A bank, in exchange for opening a distribution network, i.e. access to its 1 million or 5 million or 10 million customers, actually negotiates a rev share with the fintech. This we do natively in the API. So we create a situation where everybody wins. And none of this is new. We didn't invent the principles of open architecture or extensibility, but we did go and incorporate them directly into a core bank. So what I'd like to say in conclusion is that while it is challenging to explain to you in 7 minutes what we've just spent 4 years building, if any of you guys are planning to launch a new bank, a direct bank, a challenger bank, a neobank, or if you want to enter a new market or access a new demographic, and you want to do so in a situation where cost or price sensitivity is an issue, then you would be absolutely crazy not to come talk to us. Thank you.